Oh, aloha everyone, Joshua Hayes at BigWaveTrading.com. We're going to do another weekend multi-time frame analysis on the overall market. And then we're going to take a look at a few stocks we're currently long that are hitting new post-signal highs and just show you the percent gain, what they look like whenever the signal triggered, and how I'm trailing my stops. So first off, just want to remind everybody that for my personal end-of-day methodology, which this website focuses on, there are basically four things that whenever they're lined up is when you get the greatest signals, put the most size, most conviction, and we can hold for big trends. The way that you want to see these things line up, if you get 1 of 4, okay, 2 of 4, okay, 3 of 4, great, 4 of 4, amazing. Right now, there's none of these are in alignment, and I just want to show you visually via Telechart version 7, Telechart version 20, and TradingView what we're looking at right here. So first off, we'll just start with Telechart version 7. Just want to keep showing you guys. Look at this downtrend. Look at this huge distribution. Look at this uptrend. Look at the lack of volume on the uptrend. Does volume matter anymore? I don't know. To me, it always does. It always will, always has. But, it's a new kind of world, new kind of market. The one thing that I've noticed that when we had this downtrend, the accumulation distribution line at stockcharts.com held up really well with these ETFs. And if you notice all these open body candle bars where you open here, trade down to here, and close higher than where you open, it's possible that in the mix with all this distribution, there were strong accumulation days. That being said, all the biggest and tallest volume bars are red, not green on the way down. So it's not that convincing. So huge distribution here, low volume rally here, and you can see that obviously on every single one of the ETFs. So that's that. So the volume profile, volume price profile is not so solid. That's number one. Number two, is the VIX below 30, preferably below 20? I'm going to make this line right here, 20, and we'll go ahead and go out to a longer time frame whenever I can actually get it at that 20 level. That's close enough. Here is a weekly chart. When the VIX is below this line, this is when my methodology does the best. 2013 was an amazing year. 2017 was an amazing year. There were periods even in 2018, but we didn't have a lot of huge winners. 2019, a little choppy. We still had some good winners. But once again, when the VIX is above this line, my methodology is normally market's too volatile for it, which means we go to an intraday time frame, or we focus on other methodologies like playing sweeps in the options markets and focusing on those stocks. Stocks like VTIQ, that whenever we see these big, huge levels of sweeps come in, look at what can happen. On the call side, put side, it's reverse. So now we don't have the VIX in our favor. Number three, hot charts, beautiful chart setups. Stocks that kind of look like this, IBIO, but everywhere. See all the green in the bottom, all the big, tall accumulation bars, this nice rounding out base pattern. That's number three. Do I have a whole lot out there? Not really. And the ones that I do have out there, they're all kind of coronavirus, COVID-19 related. So, it's not like you have a big, large list to choose from. So then the last thing that I look at, and it's actually the most trustworthy out of all my technical indicators, so we're 0 for 3 so far, how's the time segment volume indicator look? So let's go take a look at that using TradingView.com charts because they have a nice background to you. So this is the SPY. This is the time segment volume 24, 12 moving average, lead line, signal line. This is the daily chart of the SPY. So now what I look for, so we don't have the volume profile with price, right? We don't have hot charts. We don't have a VIX under 20, much less under 30. And we also now need to look at my time segment volume indicator. Is it trending up and bullish? Remember, this is just a daily. And look at how well that move off the lows worked with that positive TSV. Notice that when the TSV finally gets back below the signal line, and it looks like this, how we don't do a whole lot, it's an extremely reliable indicator. Notice this sell-off here. This is just a daily. The daily is never really that important to me. But do you notice how it even lines up pretty well on the daily? So we see here on the SPY that on the daily, the shortest time frame, signal line is trending down, lead line is below it. Okay, that's not that great. Let's go look at the QQQ and see what it looks like on the daily. Same thing, an alignment, but here we got some chop. Notice how we're not really making any progress here. This QQQ is still trending higher, still above its 21 EMA, so there's no reason to be bearish on this index just yet. But if you notice, we're red and red. Now we look at the DIA, we're also red on a daily, and we're rolling over. IWM, we're also red on the daily. But more importantly are the larger time frames, the weekly time frames and the monthly time frames. How do we look on the weekly? Hey, the IWM tried to tick above its downtrending signal line in April, or in May, I guess it's April because it leads into the month. But, sorry guys, this is the weekly chart, my bad. Last week it tried to tick higher above the signal line, but immediately has been rejected this week. And with the signal line in a downtrend, it's still clearly in bearish mode on the IWM. When we look at the QQQ, we still have a little bit of green last 2 weeks, but overall the trend of the signal line is still down. There's nothing to get too excited about longer term there either. The DIA and the SPY remain red, 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 red since the sell-off started. Now this is the most important time frame. This time frame, if you look at this SPY going all the way out here, when it's green, good things happen. When it's red, bad things happen. My best returns have always come when this shaded area is green. You'll notice that since 2009, there hasn't been a whole lot of green, which kind of makes sense and is the reason why there's only been a couple of outstanding years on my end on the end of day side since those 2009 lows. We still get some great stocks, and I find them every year, and we're going to go over a few right now that's happened since March. But the best time to get long with size, with conviction, and hold for large gains are when this monthly indicator is green. So with that being said, how do we look on a monthly time frame on the SPY? Not good, and haven't looked good since September 2018. That lines up with the DIA, and that also lines up with the QQQ. Now, this was the index this is why I thought that we were on the monthly on the IWM. You can see for 1 month, it went green in April on the QQQ. The signal line was still downtrending, though, and this month, we're back in the red. So, overall, we are red, quote, quote, downtrending, quote, quote, bearish on the time segment volume on every index on the daily, weekly, and monthly. So short term, there is no reason for any excitement in this market. We are range bound. The momentum is still on the bearish side for the longer term, and short term, it's choppy at best. So where's some support and resistance lines we can look at? For that, let's go look at the Telechart version 20 charts for these lines. So this is the SPY. I have the Fibonacci retracement from the highs to the lows drawn out here. You can see that we found resistance right at the 62 Fibonacci retracement level. You can see currently we are bouncing off the 50 Fibonacci retracement level and currently are consolidating in this kind of like pattern here. Where we also happen to find resistance was right at this gap area right there. Notice how the SPY is run into that price level right there. So where can we expect to find some support? These highs, once we pulled back and found support at that 23 Fibonacci retracement level and then took it out, should now act as support. So this is, and it also happens to line up currently with the 38.2 Fibonacci retracement level. This is where I expect the SPY to find some support. If it does not, there is a gap fill on this chart right here. And there is a gap fill on this chart. Well, let's draw another circle here. These are also two other levels. If those levels don't work for you, then we could also look at this support level here, which happens to line up with the 23.6 Fibonacci retracement level. So all of these levels are good support levels to look at if you think that the market's going to find another low and then rally to new highs. If you don't think it's going to rally and continue to roll over, well, we have that 200-day moving average. We have the 100 moving average, that 62% Fibonacci retracement, this clear resistance line, and that can all hold you into this trading range while all these support levels can hold you into a trading range. There is no way to know which way we're going to break out, but remember those time segment volume lines that I showed you? Now look at the PPO and the PPO histogram. Look at my TTM trend momentum. Doesn't mean it has to stay in that direction, but everything is indicating that a chop or pullback should continue. And if you look at the QQQ, you can see even the PPO is weakening there. The TTM momentum trend is too. IWM, DIA, similar situations. So just keep that in mind. Other support levels you could work with. I'm going to erase all of these lines. So put them on your chart if you want to, or memorize them. It's up to you. But another area of support that you can be looking for is draw your Fibonacci retracement from the lows to the recent highs. And right here, this is your 38.2, 50, and your 62% retracement levels. Line those also up on the chart. And if you have overlapping, so notice here, we happen to overlap here with that 23.6 level from the bottom and that support level there. So this is going to be a very super strong support level. You also notice that these recent highs, that kind of lines up with that 38.2 Fibonacci retracement level. So there's another strong support level. You also know this gap area. We have that other 50% Fibonacci retracement levels. So these are all very strong support levels to be watching to see if the SPY can find a low. And obviously the 100, 200, that resistance line, which now also happens to line up with the highs obviously here, are all good resistance levels. So that's what I'm looking at with the market. I expect this to continue to be choppy, range bound, until we can either break out above these moving average lines or all those lines you saw me draw below it here to the downside to retest the lows. But overall, there's a lot of good looking stocks out there, a lot of chart patterns that are holding up. So it's hard to be too bearish in the short term, but we have to admit, just by looking at these charts, the market is weakening. So all that being said, while it has not been the best uptrend for me off the March lows to the current highs in my end-of-day methodology, day trading wise, it's as good as ever. So the short term still works. But what I want to show you guys is that even with my methodology being out of favor in this current market environment, there are still some very solid winners. And I just want to review those really quick before we wrap up this video. All right, guys, just want to show you that from the March lows, there's still some winning positions. This is RTTR. Still looks good. This was the signal date. Candle over candle. Heavier volume. Max green bop. Get long. And as you can see, it's still up 125% in 1 month. If I'm no longer long, I've taken my profits and I'm out of the position. But there are still some members of the website that still have positions. And if I was still long, where would my stops be? Very easy. I would definitely, I go super aggressive. I would have 1 here, 2, 3, and 4. But you could also do 1, 2, 3, and or do an uptrend line, and a close below the uptrend line would get you out of RTTR. But hey, this is one that's been working despite the overall market not being in favor on my end. This is Mark. This was the signal right here, candle over candle, heavier above average volume, max green bop. It still has a 225% gain in 1 month. Sadly, once again, no position. Where would my stops be? Well, first off, if we did the uptrend line on this one, it's way too steep, and you would be completely knocked out of this stock by now because it's closing below the uptrend line. So I would never use anything like that. But after yesterday's or Friday session, I would still have 1 stop here. I would have a 2nd stop here, a 3rd stop here or here, and then I would still give it all the way down to here for on this candle here where we got the pocket pivot point signal as a final stop. So I just want to show you 2 big winners, but these are the most important ones because these are the ones that I still have a position in. Actually, I'm going to review one more that I've taken myself out of due to interactive brokers issues, which is besides the point, but UMRX from the signal date here to its high, it's now up 54%. In a little over 1 month. Hammer candle over candle, heavier above average volume, that max green bop surge. It's been a nice steady trender. With this one, because of the, see how it's got the red bop here, balance of power indicator here. So with this one, UMRX, if I still had a position, 1 stop, 2 stop. This is for members that are still holding this stock. 1 stop, 2 stop, final stop right there. I would not let it go below here. That final stop also ensures that you'll lock in profits on the entire position if it has a reversal of fortune in the upcoming week. So the 3 stocks that I'm still long that I want to review is ZM, Zoom Media. We profiled this one on these public videos over and over and over. Hammer candle over candle, heavier above average volume, bop surge. It has been choppy, but it's still trending higher. For ZM, One stop here, two stops here, third stop there, final stop right there. And that final stop will ensure that on that last piece that I still have, I'll leave with the small profit. ZM, since the start to where we are now, 57% gain in 2 months. Not too bad. Now, unfortunately, none of these signals allow me to push my entire portfolio into any position right now. Really, entire portfolio. The most I ever go is 20% of my account capital into any one position on an end-of-day basis when I know that there is no ER event or catalyst event coming up. So that's the most I ever do. But still, there's other members. You can go as low as 1% if you want, as high as 100% if you want. It's up to you and your risk tolerance. Had you do that, 2 months, 57% gain. Not bad. Then there's TW. TW came from my CAN Slim scan, was confirmed in my price volume BOP surge scan. This is what it looked like that day. Hammer candle over candle, above average volume, pocket pivot point signal, and you can see the surge in BOP the day before and the heavier BOP on the signal date. Now TW's buy stop was at 53.25. The next day it gapped up, never pulled back in below my price. So I could not get long until it traded back down and below that signal date's high day and then traded up and through my good to cancel buy stop price. That did not happen till the 4th of May. Finally happened and triggered. And since the signal date, TW is now up 14% in a little under a month. Not too bad, considering it's a CAN Slim, slower moving, higher quality liquid stock. So with TW, I have a stop here, 2, second stop, third stop, final stop. So 1, 2, 3, 4 stops on TW. You guys, if you want, it's always up to you. You could draw an uptrend line and a close below the uptrend line gets you out. That's a little too aggressive for me, but it's an alternative to make sure that you lock in profits and are only long stocks that are trending higher. Remember, I always preach rule 1, cut your losses, cut your losses, cut your losses. Rule 2, cut your losses, cut your losses, cut your losses. So if we ever get long a stock and it does trigger and doesn't work immediately, we're getting out. We're starting to get out immediately. We're cutting losses immediately. I detail them every evening in my video lessons. We do not hold losers. We only hold winners. Speaking of winners, the best long position that I've taken during this entire uptrend, because it was the first signal. My perfect speculator scan, which is looking for the best of the best stocks in the market, the stocks near their 52-week highs, stocks that have already previously moved 100% from their 52-week lows to their 52-week highs. They've been few and far between, giving me actionable, legit signals. PFSW finally did that when it produced this big hammer candle bar of recent strong price support on heavier above average volume with max green BOP, and you can see the pocket pivot point signal. This is one of my best signals in a higher quality stock in a long time. That being said, it's only a $4 stock. It's not like it's a $40 stock, so it's not CAN Slim quality, so we really couldn't get any size with it. But when I get things lined up, these stocks start showing up in multiple scans. You get this signal, you can really push it, and this is when I get aggressive with my personal capital. That being said, treat it as a normal everyday signal. I did increase size, but it was extended from its 20 simple moving average. It's hard to see here, but price, the low, 368, 367 is the 20-day simple moving average. So by rule, by proxy, had to reduce the size in half, but one day that won't happen. And as you can see, PFSW has been basically perfect. And in 1, 2, 3, 4, 5, 6, 7 sessions, we have a beautiful 54% gain in 7 sessions. And that's how it's supposed to be done. And that's how it's supposed to happen. So what I'm doing PFSW, I have one stop here because of the volume surge on Friday. 1, 2, 3, 4, 5. In an era of $0 commissions, it doesn't matter if you have 100 stops or 1. It should cost you $0 if you have E-Trade, Schwab, or Thinkorswim. And with these end-of-day signals that are slower moving, those platforms work for this methodology. All right, we're at that 20-minute mark, so I'm going to go ahead and wrap it up here. If you liked the video, please give me a thumbs up. I appreciate all the love. If you didn't like it, give me a thumbs down. Whatever. Hit the subscribe button, ring that bell. If you have any questions, comments, concerns, just anything you want to talk about, if you just want to say hi, leave a comment below, and I'll respond to them as soon as possible. Have a wonderful rest of your weekend, and great luck during the upcoming trading week. Aloha.